Hello, I'm Bernard Hickey from interest.co.nz and welcome to another in our series of double shot interviews. That's where we bring in a CEO or a minister and talk about the things we're passionate about at interest.co.nz, including house prices and what's happening in the property market. And today we have Peter Thompson, the Managing Director of Barfoots and Thompson, the biggest real estate agency chain in Auckland at least, and obviously one of the biggest in the country. And obviously Auckland is the biggest market in the country. Yesterday, some numbers came out on sales for Barfoots and Thompson. What happened in March?
Good morning, Bernard. A very interesting month for March, partly seasonal, where traditionally March is our biggest month, but the figures that came out saw an unexpected increase in volume of sales. 1,070 properties were sold through our company, and the average sale price skyrocketed to $581,000. So some very interesting figures, some anticipated, some not so anticipated.
Were you surprised?
Very surprised. Certainly the last 5 to sort of 7 weeks, we've seen a lot more activity, a lot more sales being made in comparison to the previous 2 years. But when we started reaching the figures in March of 2007, so getting back to good activity.
Now, what do you think triggered this surge in activity in March?
I think what we're seeing is that there's a lot of confidence and stability coming back into the Auckland real estate market. So I think people are accepting that possibly the bottom has been reached. We certainly don't believe it's going to be the start of another bubble, and we certainly don't want that. We want what we would like to see is just the continuation of the volume of sales rather than the price going up. So I think that, Auckland becoming a super city. We're hearing through the Auckland city that 20,000 people are going to be moving to Auckland per month. So there's going to be a big demand on real estate.
How much of a factor was the rate cut on March the 10th?
I think that's had quite a significant impact. Not so much directly related to the sales that were made in March, but certainly more activity as people looking because they're thinking that they can get a little bit more money and looking at starting to buy property. I think we'll see that over the next month or two the effect of that.
What parts of the market are moving faster or slower than the rest?
March traditionally is a big time, or a good time for our $1 million+ properties. Beautiful sun that we've had, swimming pools, tennis courts, etc. always look nicer. But we've actually seen all price spectrums, whether it's under 200,000 or the 3 to 500,000, 5 to 750,000, where we keep records. They've actually gone up in equal proportion throughout the month. So yes, there were more properties over the $1 and $2 million property, but the prices were moving as well.
Just looking at the breakdown of the sales, it looks like the big growth in volumes was in the central suburbs and on the North Shore. On the fringes, not quite so much growth. Why do you think those particular areas?
Yes, certainly again, with the inner city areas, they tend to be the higher price brackets, so they do tend to sell more at the beginning or at the end of the year. North Shore is basically right throughout the year, whereas the West Aucklands and South Aucklands tend to be a little bit more slower, in the peak times and are consistent throughout the year. So again, they still had good volume turnover, so it's pleasing to see that they're around.
And looking at those stats, the sales of over $800,000, the growth there was much more than in the under $800,000 brackets. Why do you think there seems to be growth in those more expensive houses rather than in the cheaper ones?
I think, as I said, I think it's more seasonal. I think if we go, people are asking me what's going to happen next month, I think you will start to see a slowdown in that high price stuff. So it is a seasonal trend that we do have. But again, I think there's also people that sadly are having to sell their houses to repay some of the mortgages. So some of the higher prices are actually buying some of the lower ones. But there's also more opportunity for people to get mortgage finance. So maybe they're going up a level.
Are you hearing that banks are being friendlier to borrowers at the moment?
Yeah, very much so. The banks are opening up the purse, if you like, as long as people have got the ability to repay, and they're taking very strong stance on the repayment side of things.
Do you think the income tax cuts that came in from October the 1st, which were delivered mostly to those people on higher salaries, has had an impact on demand for those higher priced properties?
I think people are still paying off Christmas and the Christmas before. I don't think it's had an immediate impact, but it's certainly people are getting a little bit more in their pocket. But then, they're having to spend it more with GST. So I think they've sort of countered each other. So I don't think it's had too much of an impact at this stage.
You're not only in Auckland. What are you seeing outside of Auckland?
Yeah, it's hard to say about the exact figures, but what we're hearing is that there has been more growth, in volume of sales throughout the country. Pleasing to see on an opposition website in Christchurch that sales were only down 40% and prices only down 10%. So activity is still happening in Christchurch, which is fantastic. So throughout the country we hear there's been a lift, but not to the extent of what Auckland is.
And the Christchurch effect, are you seeing any people moving up from Christchurch to Auckland looking to buy houses here?
Yeah, Christchurch, I think what we're seeing is we've had quite an influx of people from Christchurch, but I think it's more on a temporary nature. People that just wanted to get out, come and stay with families, and they weren't buying or renting. Some of them have already gone back to schools once the schools opened. I think we won't see real impact of the Cantabrians moving until they either sell their property or get the insurance. And I think that if they move to Auckland, where do they have the money? And those sort of issues have to be asked. So there hasn't been a real impact on it at this stage.
Now, Barfoot and Thompson, as well as managing sales of properties, also manages rental properties. What did you see in March in rental properties?
Saw quite a big increase in the average weekly rental, up to $434 a week. Quite a significant one. Shortage of properties is still the big issue that we have, and that is starting to push rents up. And also the taxation changes for landlords. They're now seeking, optimising their return from the property. So it's an opportunity for them to do so when there's such a demand. Once there's a supply, then the rents may come back down.
Because from April 1, those tax changes took effect. Being able to claim depreciation on buildings was removed, and the rules were changed on LAQCs. You must see a lot of rental property investors. What are you hearing from them now those rules have kicked in?
I think what we're seeing is a totally different type of investor, one that is not buying for immediate short term, but more looking medium to long term investment, and that's been the big change.
Peter Thompson, the Managing Director of Barfoot and Thompson, Auckland's biggest real estate agency group, there talking about figures out for March. I'm Bernard Hickey. That was another in our series of Double Shot interviews.